Welcome to Perfect Pips FX. If you are new to Forex trading or you have been struggling to make consistent profit, understanding market structure is the first thing you need to master. Think of market structure as the blueprint of price action. It tells you where the market is headed, how far it can go, and when it's about to change direction. In today's video, we'll be diving deep into market structure, breaking down the fundamentals of market structure, such as the higher highs, the higher lows, the lower highs, and the lower lows. These will be your building blocks for every single trade you will make. By the end of this video, you will understand how to read the market like a pro and identify trending and sideways market, which will help you make smarter trades and protect your capital. So grab a pen and a paper and let's get started. I'll see you in my screen. For we to know the current market structure, we have to identify if the market is trending or the market is consolidating. One of the reasons this price action right here, sake of this video. To identify the market structure, we have to know, is this market trending or is this market consolidating? You can see the market is obviously trending. And we have to identify, is the market trending to the upside or is the market trending to the downside? Now, most traders, once they see the market going up like this, they just say, oh, the market is trending to the upside. And when they see the market coming down like this, oh, the market is trending to the downside. But this is what I mean. Now, this market is pushing to the upside. Clearly, obviously, it's going up. That does not make it an upward trend. For you to see that this market is in an uptrend, we have to identify what we call the higher highs and the higher lows for an uptrend. Then you see the market is going downwards. We have to identify what a lower high and what a lower low. This is what enables us to implement any strategy in the direction of the market to get higher probability or higher chances of winning that particular trade. Now, enough of you talking. Refer to this place as an higher low, because this current low is higher than the previous low. So we call this an higher low. Market broke structure to the upside. Now we call this point right here, we call this point the higher high, right? Signified by HH. We just widen it a little so you can see it. Put it there like this. Now we call this high and higher high. This recent high is higher than the previous. So we call it an higher high. Now, same as bearish. Let me do it for bearish quickly so you can really understand what I'm trying to say before I dive back into the chart. Now, as you can see again, for bearish, you observe that this high is lower than the previous high. We call it a lower high, right? You get me? This point, refer to this point as what? A lower low. Now, obviously, again, it's called a lower low because the current low is lower than what previous low. It's called a lower low. Now, this is the basic foundation of trending market. A bullish trend makes what? Higher lows and higher highs. A bearish trend makes the opposite, a lower highs and lower lows. It's as simple as that. We apply it here. Now, we can see that, okay, this is higher than the previous low. What can we call it? You are correct. A higher low. Now, let's look again. Price has broken this structure to the upside. Now we have to look for an higher high, because for an higher low to be formed, there also have to be an higher high. So now if you look, we have what? An higher high at this level, right? Or mark it out. Now it's called higher high simply because market broke structure and the high created is higher than the previous. So we call it an higher high. As simple as that. Same here too, as you can see, this is also an higher high, right? And this also is an higher low. As simple as that. Now, as you can see, for the bearish aspect of things, if you notice again, market got to this level, pushed back down, created this level, and broke structure. Now we have seen a break of structure. Now, if you look the upside, you discover that market pushed up, then broke this previous low. This high that market created is actually lower than the previous high. So we call it what? A lower high. Write it that LH. Now, because this low is lower than this previous low, simply call it what? A lower low. It continues like that. It's as simple as that. Now let's do that of consolidation. Now, if you notice, consolidating market is stuck within a range that it can't go past. Now, in this case, I like to say the market is being indecisive of where to go, meaning buyers and sellers has equal volume. Why I'm saying that market is at equilibrium or market is being indecisive is because the volume of buyers and sellers are equal within that range. That's why it's advisable not to take trade in the ranging market because there's no much volume at that time. To know if a market is consolidating, you see market getting to a certain level and you see it coming back down. It gets to a certain level again, you see it going back up. It does this over and over and over again. Now, this time, my best advice for you is to stay out of the market. For the market to move, one has to get higher volume. So that is that for trending market and consolidating market. Now, you know how to identify market structure. You know when the market is consolidating and when the market is trending. Not to bore you out or take your time. This video is going to be turn detail series. So this is just the foundation of market structure. In my next video, I'll be teaching you how to spot reversals using market structure. And with that, we have come to the end of this video. Please do not forget to subscribe, like, turn on the bell notification icon, and if you have any question, you can leave them in the comment section. Thank you. Bye for now.